Good evening, I'm Ewan Ramsey.
I'm Dr. Prabhat Murugaki.
And so this week, if you opened up almost any financial publication, you probably saw a similar headline. Sydney market is obviously softening, Melbourne is slowing down and auction clearance rates are declining. But the obvious conclusion is that the property market is correcting. But what if that's really only part of the story? Prabhat, before we interpret anything today, let's go ahead like we always do, and let's start with the evidence.
Yeah. One of the challenges with national headline is that they aggregate markets that are behaving very differently. So that's the main problem. And the first data point is auction clearance rates. When we separate those results by location and by price segment, the divergence becomes clearer. And higher value Sydney and Melbourne markets have softened more noticeably, and meanwhile other locations like Brisbane and Adelaide have remained considerably more resilient. Those are not options, they are the different data sets describing different market behaviors.
Yeah, and look, this is probably one of the first misconceptions that I think a lot of people like to let go of, is that there's not really one market, right? There's hundreds within the space. Some are responding primarily to borrowing capacity, others are responding to migration, others are certainly responding to supply. But when we arrange them all together, we lose the information that matters most, right?
Yeah, exactly. The second observation relates to the migration. The interstate migration into Queensland, Western Australia and South Australia remains elevated compared to other pre-pandemic levels. And the population demand has not disappeared simply because the monetary policy has tightened. And that's why structural demand continues to influence some markets differently from others. Yeah.
And so I think that's probably where investors need to slow it down a little bit. Demand doesn't really arrive evenly. Employment concentrates, infrastructure concentrates, population growth concentrates. And I guess eventually capital growth often follows that concentration, which means understanding, I guess, where that demand is going to be more valuable than trying to predict, I guess, maybe the next Reserve Bank meeting.
Yeah, the third data point is more strategic. So that is the current legislative setting for SMSF limited resources borrowing arrangements, and which created the defined timing window for investors considering that ownership structure. And that timing consideration exists independent of what is happening in the auction markets. And also another example of why portfolios portfolio decisions should not rely on one headline. So that's another important thing.
Yeah, exactly. And I think there's three really completely different pieces of evidence that sort of three completely different drivers, right? Yet they all seem to leave us back to one same conclusion, which is that we are not observing one market. We're observing different markets responding to different forces, and that changes everything, I guess, because if the market is not moving together, then ultimately your portfolio should not be analysed obviously through the same lens. Yeah. So if that is what the data is actually telling us, then why is almost everyone still talking about a correction? Is ultimately that's the conversation that I think we really need to have today.
Yeah.